Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at a good example of our Wave 3 or W3 trade setup that unfolded on a 3-minute chart of the NQ late on Friday afternoon. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you have, there always will be losing trades, and it's important to understand and accept that. Right, let's take that down. So the trade setup I want to look at is this TS3, W3 or Wave 3 trade setup on a 3-minute chart of the NQ using day session only data. That's from 9:30 till 4:15 New York time. It's what we call the day session. So what is a W3 trade setup? Well, a W3 trade setup is where we're looking to catch the end of a Wave 2 to then catch the Wave 3 swing. So how do we identify this? Well, first and foremost, we need to go to our higher time frame chart. But before I do that, just want to have a quick look and see that there were some other trade setups on this chart here, so I don't want to just ignore these. There was a TS4 buy setup on a black MTP trend or neutral MTP trend earlier in the day. So if I right mouse click over this blue buy bar, that would have produced a 2-hour profit. The initial risk was quite big. It was above 2% of our $10,000 account, so you may have had to been trading a smaller, the micro NQ to actually take that particular trade setup, so it was quite a big risk. There was also a TS1 sell here a bit later on. This was also a valid trade setup, as we'll see in a minute. If I place the analysis on, this didn't get down to its first target, so you've either had your stop at break even because you're at the DP from the wave B on a slightly shorter time frame, or if you hadn't, then it would have been a 1-hour loss. As I said at the start of the video, losses can and will and do unfold. It's just a case of keeping those losses small, it's not avoiding them. But anyway, if you're new to MTPredictor, our system is not a black box system. We don't just take all the setups blindly. We look to see when the pattern fits in with a clear larger degree trend. So for this, we go to our higher time frame. It's a time frame between 3 and 5 time frames higher. So for the 3-minute chart, it will be the 15-minute chart. For say a daily chart, it would be the weekly chart. Maybe if you're looking at Forex on hourly charts, you'd go up to the 4-hourly chart. So how do we do this? Well, if I go back in time to earlier in the day on Friday, you can see we had a pivot high here. So we right mouse click, we do decision point. I'm only using the typical DPs in this particular example. They're the ones we use mostly. But can you see how it had a resistance area on the chart in advance? So what we're looking to do is, if I turn training mode off, we're looking to see if the market enters these levels, then if it does, it reacts at those levels. In other words, if it makes a high at that level, which indeed it did, then we deem the picture's clear, and therefore we can do shorter term analysis. So if I now come down to the shorter time frame, can you see how that 15-minute DP nailed the high there perfectly, and that set the large degree trend to be down, but more importantly set the large degree trend to be clear. So in other words, we're not in a random phase, we're then looking to have a clear picture. Our MTP trend turned red to indicate that this large degree trend was also clear and the market was in a downtrend. So what is a TS3 W3 Wave 3 trade setup? Well, what we're looking to try and do is we're trying to catch the end of a Wave 2 to then trade the Wave 3. The reason we like Wave 3s is typically they are the strongest and longest in a completed 5-wave sequence and therefore carry the largest profit potential. So if I put the major pivots on, you can see what this looked like. So because the market reversed at this high, this is where we start our Elliott wave count on, or the point we start our Elliott wave count. This is my unique isolation approach to Elliott wave, what we use in MTPredictor. In other words, we don't try and fit Elliott wave counts in all the time because we understand that markets are random half the time, and therefore half the time the Elliott wave count doesn't work and it basically breaks down. So what we do is we draw a line in the sand when we get the market pattern clear. In other words, the picture becomes clear, and that is when it makes a reversal at our higher time frame support and resistance. So we draw the line in the sand here, we start here. The initial move down will be a wave 1. We're then looking for the end of the wave 2 correction, and we're looking for that to unfold as a minor ABC. And perhaps if I just use our training mode and I jump back to level there, we can see it a little bit clearer. So this is what we're looking for. Initial move wave down, down is wave 1. We're then looking for a wave 2 or B correction, which we have here, and that's to unfold as a minor ABC. So if you can see the swings there, A, B, C. It's a little bit clearer if I put the intermediate count on. You can see there it is A, B, C, and we're looking for that to come into the major one, which is here into, it says wave 2 or B, but because we're starting off this major high, this is deemed to be a wave 2. So this is what we're looking for. We're looking for A, B, C into a wave 2 correction. We then project this down. If I right mouse click at the red cell bar, do analysis, we're then projecting that down, but not at our first targets. We're then looking to use the wave 3 target. Why? Because we're anticipating that this is a wave 2 correction. So you can instantly see why we like these trade setups, because if the market gets here, the profit will be not just large in dollars. Actually, I'll change that back up to our default account. Sorry about that, I had the wrong one there. That's probably why the risk was a bit small earlier. So our default account of 2% of a sample $20,000 account, but it's not just because the profit is large at 4,500. It's because the profit was large in relation to the initial risk. So if this TS1 sell had been a loss for you earlier, that would have been a -1R loss. But if the market gets down here, it would be a plus 14R profit. So do you see how the profit is large, not just in dollars, but in risk reward units? That's why we like the wave 3, because the strongest swing and longest swing tends to have the largest profit potential in relation to the smallest initial risk or the losses. So if I turn trading mode off, you can see, oops, I just reset the scale there, sorry, that. You can see that's indeed what the market did. It came all the way down here. It had a little bit of a scare here where it went up basically into a loss, but it never went to our stop trigger, so it never actually stopped us out. The market then declined nicely. It then reached the typical wave 3 WPT not long before close, where a profit of approximately 14 times the initial risk, or 14R, was available. If you'd notice the MTP trend here, when you reach that target, can you see how the MTP trend was strong? In other words, our MTP trend oscillator was beyond our strength band, that grey band. That indicated it was strong and indicated the market was likely to run a bit further. So you may well have even either trailed at the bar highs, if you had have done, or then held it into the close, where the profit would have been increased even more to approximately 20R. Or if you'd just done above the bar highs, approximately 19R, 19 times the initial risk. So that would have been a very, very good trade indeed. But even if you'd just come out at the typical wave 3 WPT, which was the initial target, that would have been a large profit of approximately 14 times the initial risk. But can you see what we're looking to try and do with our wave 3 trade setup? What we're looking to try and do, which we're trying to look to start the sequence at the higher time frame support and resistance. This is the same for all our MTPredictor analysis. That's when we deem the picture's clear. The initial move down will be then deemed a wave 1 in Elliott wave terms. We're then looking for an initial correction, which should subdivide into a minor ABC. That's the typical minor pattern in a wave 2 corrective swing. We're then looking to catch the end of the wave 2 swing to then trade the wave 3, which is normally the strongest and longest in a completed 5-wave sequence. And as you can see, this setup here proved to be a very good example of our W3 or wave 3 trade setup, where you had a nice trade there catching the decline on the NQ. There it is, W3 or wave 3 trade setup there. So a great example on the 3-minute NQ that unfolded on Friday.